Hello viewers, welcome back. We are now looking at the DCF schedule part 2, and we want to finalize these sections here that we haven't touched on. We want to look at these sections right here. We finish these sections and also look at one last point that we didn't talk about up here is dates. This one for dates, we didn't talk about it. So we need also to finalize those two sections. So that's what we are going to focus on for now. So let's try to scroll down and have that into focus. Let's first finish these three sheets that we have here, the tables. So let's continue down this process, and you can see here we are just repeating the enterprise value from this point here. You are seeing we are just repeating that value for enterprise value. So what we need to do, we need to link up this value here. So we go equal sign into that cell here that has that value here, F58. So hit enter, we have linked that value there. So now what we are going to do, the enterprise value that G63 has been computed. Now we can go, we are going to use that enterprise value that we've computed in cell G63. As you can see, we want to subtract the enterprise value, want to less off the net debt. So what we are going to do here, we are going to just use the sum function because this one is already in bracket. So we use the sum function to have that subtracted. Alt equals, and we hit enter. We've now been able to get our equity value in that cell G65. So we can see we've subtracted the net debt, and that's going to give us the equity value. And that means here we have to just connect up things. If you go to this cell here, cell N56, if we progress to that point there, cell N56, we are seeing that we are repeating the equity value that we have already computed. So what we are going to just do, we are just going to make the model clear and nice by just linking up some of those values. So what we are going to do, we put in an equal sign there, and we move all the way down to this section here in cell G65 to have that in place. So we have linked it to that side. So now what you see down here, this section is for equity value per share. So meaning this one is supposed to be equity value per share. These are shares outstanding, roughly 34.2 million US dollars. They are shares outstanding, number of shares outstanding. So the equity values that we are seeing in cell N56 are the normal amounts, the nominal amounts of about 115 million. That is in equity value. But we know how many shares are outstanding here. 34.2 million shares. So now what we are going to do, we are going to figure out the equity value per share in US dollars here. So what we are going to do, we are just going to divide the equity value by the shares outstanding, and that will give us the equity value per share. So we put in an equal sign here. We get this value, we use the up arrow, that divided by number of shares outstanding there. Hit enter, and that will give us the shares, number of shares, the equity value per share, which is $3.37 per share. Now, the thing about this kind of analysis is we essentially come up with our own view of the value of the business. In other words, the value of the shares. We come up with our own view. In other words, we do our analysis and we come up with our own view of our shares. Now, the issue here is that since we've computed our own view, we need to find out what is in the views of the market. In other words, we tap into the market and we see what is the current price in the market. In other words, we look at the market's view. And the market's view is right down here in this cell N64, where it shows $2.71 per share. So this means that we've actually gotten a higher value than what it is in the market. So what we are going to do, we are going to link up, because this one for premium, it says here equity value per share. So we need to link up this value in cell N63. So in order for us to do the comparison, we are going to calculate if our view is at a premium or it is at a discount to the market's view. The only way we can do that is by picking the equity value, our view that we've computed, which is in this cell here. So we link it up to this point in cell N58. So we get it down here. So we compare these two values, this one and this one. Are we at a discount or we are at a premium? In other words, we are seeing that 3.37 cents and 2.71 cents, we are seeing that our view is higher. So what we are seeing here is that we are now at a premium because our value is high. Now we want to compute, either we want to compute that premium, but we want to compute it in a percentage, because if you just get the difference, that will not give us what we want. We just need in a percentage. What is the percentage of that we've made as a premium? So what we are going to do, in order to finish this up, we are going to put in an equal sign here, and we are going to take our view of this in cell N63. We divide it by the market's view. So that is this divided by the market's view of that. And now we are going to less 1 minus 1, because we need a percentage. We want to have those values as a percentage. So minus 1, and then we hit enter, and that is going to give us 24.2%. So our assessment of the value is at a 24.2% premium to the market's assessment of the value. And this is one of the things that we are always looking for when we are doing this type of analysis. In other words, are these going to be opportunities where our view is different from that of the market's view? And if it is so, that creates an opportunity, because now if we are to go and purchase the shares or the stock at this place, and then we are now correct about our view, because now you may go and buy at $2.71, and you find that our view is now correct, meaning we shall stand a chance to make a nice return of 24.2%. So as you see, we are not yet done with this analysis, as you can see from this point, because there is one item that we haven't discussed about. This is the item here in this section here. That's the one that we are in for this row 40, where it says valuation. So we start from the discrete and all that. So what we need in here, we need these dates to do is to increase forward by 1 year at a time. In other words, we want these values to be increasing. We are also going to use a formula to have that in place. And the easiest way to do that is by using an edit function in Excel. So what we are going to do, we go into this cell, L40, we put an equal sign, we go to edit. When you see edit comes up, you just hit the tab key and it has opened up. Now what you are seeing here, it says start date. Now, for the start date, we can see that the start date is this one right here, because they have already given us 23rd, this one. The year is 2023. Actually, it is December 31st, December 2023. That is our start date. The valuation date is 1st Jan 2023. So what we are going to do, we can use the left arrow to just pick that start date at K40, in that cell K40. So we put in a comma. And now what it is asking us, it is asking us for the months. Now here we shall put in 12, because the year has 12 months. And then we can close the bracket. And when you do that, you come and hit enter. And it has changed this one. This one is now at 31st December 2024. So it has put in the date that we want. The only thing that we need to do to complete this is by doing a copy, Ctrl+C to copy. Then we use the Shift key to highlight across, using the right arrow to highlight. You hold down the Shift key, then you go the right arrow. Then we are going to paste special, Alt-ES. Now, we want now to paste the formulas, because they are the ones we put. We paste the formulas. Now you are seeing the value has been changed. This is 2025, 2026, 2027, 2028. So those are the values that we wanted to have in that place. So now that we've finished that, we can see that we have completed the Dcf schedule. Now what we want to do in the next video, we are going to move down to this section right here, for sensitivity analysis. And that sensitivity analysis page is where we are going to show some really neat technology that we are going to use to fill in all these tables, because here we are only seeing what is here. They are just tables. This table, this one, and this one, there are 4 tables. So want to look at some neat technology or some terminologies, or the techniques that we are going to use to fill these tables. So what we are going to do from this section is we are going to use what we call the data tables. So we'll see you in the next video as we are looking at sensitivity analysis.